Welcome back to another installment of Paladin Financial Talk. I am your host, Matt Bryant with Paladin Financial. And of course, we have the wonderful Tony Shore.
Happy to be here, Matt.
Yes.
I'm excited about today.
Okay.
You handed me some show notes, and I don't even understand. I'm like, I'm sorry,
Hey, I'm here to guide us on this journey.
I don't speak Japanese. What do all these numbers mean? I mean, there's a lot of percentages and abbreviations, and I don't know what we're doing here today.
Okay. Well, we're going to do a little bit. We're going to do a market update.
Okay.
A little market recap. We did this with Tyler Ellegard back in January.
We did.
So that was more of a recap of 2024, kind of an outlook for 25. So now we're about 2 months into 2025. Just talk a little bit about what we're seeing. I won't go through all these numbers, but just give an idea of where the stock market is sitting right now and where the economy is at. So I'm going to start.
Good luck with that, by the way. I've been watching CNBC a little bit today and talking with our portfolio managers like Tyler and Binger and at Gradient Investments. And wow, there's a lot going on out there.
Yep. And we can see the CNBC right now. And they're talking about tariffs, and that's going to be one of our line items. So
I am terrified, by the way.
Good. You got jokes. That's good. You're here for the humor. That's good.
I think this show's going to be terrific.
Okay. Well, I do too, especially with puns like that.
Yeah.
So we'll start with an economic overview. Then we'll do stock market overview. We'll talk about some upcoming market indicators, just high-level things we're looking at, and then actionable advice, so stuff to take away from this with you. And
that's the important part.
Yes, absolutely. So just starting with the economic overview. So we have had a pretty strong economy overall for quite a while now. One of the big things that has been a potential drag on the economy is interest rates and inflation. So inflation is still above what the Federal Reserve wants to target at 2%. It's sitting about 3 to 3.5%. What that means is, will interest rates will they increase interest rates or will they bring them down? So lower interest rates are great for stimulating the economy because money's cheaper and people will spend more. So if you're a borrower right now with interest rates still high, looking for a mortgage, things like that, you're still sitting 6 to 7%, which is part of the reason that people aren't buying houses as at the same rate they were a couple of years ago.
Right. Houses and cars suffer when that happens. Yeah.
And if you're a saver, great. Like if you put money in the bank and you're getting 4%, that's awesome. But if you're trying to borrow to buy something, not such a great scenario.
Yeah. Yeah. Good point. So, and you mentioned tariffs. I mean, how is that going to affect all this?
Yeah. So that's kind of the wild card right now. So when Trump was president the first time around, there were tariffs, and that put a little bit of a shock to the stock market. Part of the reason is the stock market doesn't like uncertainty, and there hasn't been a ton of clear cut, this is exactly what's going to happen. They've been kind of bouncing around a little bit. But just backing up a step, a tariff, this is just reading this definition. A tariff is a tax on imported goods that a country imposes. They are a way to raise revenue, protect domestic industries, and influence trade. So Trump is using them in part to protect domestic industry. So rather than importing, we build that stuff here and export it. But also he wants these other countries to come to the negotiation table about a whole host of different topics.
Right.
So you raise tariffs, the cost of things goes up. When the cost of things goes up, people buy less of them. And that the fear is that could slow down and choke off the economy.
Right.
We don't know if that's going to happen, but that's part of the reason we're seeing so much volatility in the stock market right now.
We are seeing volatility. I'm actually surprised it's been, year to date. You show the S&P here is in the positive. It's not much. It's
not much. No.
It's 1.4 year to date. As of the recording of the show, but I'm shocked it's actually positive, to be honest, with everything that's been going on, just because of uncertainty.
Right.
I'm not saying good or bad. I'm not saying tariffs are good or bad or politics are good or bad, but the market doesn't like uncertainty.
Right. And we started off with a bang. I think when we sat down with Tyler and talked the stock market, January was a good month.
Things were
up, a lot of optimism. It's been the last couple of weeks where things have gotten a little choppy. We're starting to see some concerns, some cracks. Doesn't mean it's going to be a bad year in the stock market. Doesn't mean we're heading for inflation. There's just some things that the stock market is uncertain about right now.
Right.
And that's causing the volatility. Volatility this year is up 6.5%. We're telling people to expect that. Again, it doesn't mean it's bad, but if you're a person that's on the cusp of retirement or in retirement and you're seeing your portfolio bounce all over the place, that can be cause for concern.
Yeah.
So we still think this year's going to be positive in the stock market, but we're going through a kind of a frothy period.
Sure. So, well, I think that's, inflation, it's come down a bit. That's good. That's a good thing. Job numbers, the number of jobless people out there is creeping up.
It's creeping up.
That causes some market volatility too.
Yeah, we still have a low unemployment rate overall. It's just 4%. So that's pretty good, but you're starting to see certain sectors reduce the workforce, and that's something to watch. If that trend continues, then maybe it becomes cause for concern, but right now it's not a major issue. And then if you look at the state of Minnesota, which the state of Minnesota traditionally has a lower unemployment rate than the country overall, we're barely over 3%. So basically anybody who wants to work has a job.
Yeah.
So as on the state level, where a lot of our listeners are, we're in a good position. Again, something to watch. We don't see the world falling apart by any means, but definitely want to keep an eye on as we move forward.
Yeah. That is interesting. And, some new announcements have come out where he's saying, hey, might want to put 25% tariffs on the EU, on Europe, as well as Mexico, China, and Canada, which those are our three biggest tariff,
Yeah, those are huge trading partners with us.
Yeah.
And, what does that mean for like the automotive industry, for example, when a lot of cars are built in Mexico, for example, but throughout the process, they're bouncing back and forth over the border. So different parts are being built in different places before the final assembly. So what does that mean for your car price at the end of the day? What does it mean for steel and aluminum? There's all these things that we are unsure of. Now, oil has come down about 4 to 5% this year, which is, if you're driving a car, it's nice because that means eventually lower gas prices, which everybody loves. But it could also mean pressure on the oil industry, where if their profits start coming down, is that the best place to be invested? So kind of counterintuitive. A lot of times you think, hey,
sure,
you're going to open up markets.
What's better drilling. If I own stock in, oil or, Exxon or Mobil, would I rather pay 25 cents more a gallon and those stocks do great, or do I want gas to come down 25 cents a gallon? And I threw up on our screen here for our viewers. Just if they, since we mentioned tariffs, I thought I'd throw this up there because it shows our three biggest trading partners. And those are the three that Trump's been, talking about mainly. And you can see what surprised me about this, Matt, is crude petroleum. The majority of our imports of crude petroleum oil comes from Canada. I was not aware of that. So
now we've become a big producer over the last probably 10 or 15 years. But that's kind of that's an eye-opening number. Cars, that's not surprising, but petroleum, that absolutely is. And where do we go with it? Prices will probably go up. But again, his whole point is to use this as a negotiating tactic. And that means, I think that's short-term pain.
Yeah.
But ideally, something good comes out of it. We just have to wait and see what that actually is.
Yeah, and we hope, it's kind of up in the air. Is he going to keep using this as just a leverage tool, or will it actually, take effect, and for how long? So that's the unknown. And that's why I'm surprised the market hasn't taken a bigger dip, but it also hasn't been going up at big rates either.
Right. And so and part of it too is making up the economy in the stock market is, so the consumer is 70% of GDP. Depending on what you're looking at exactly, consumer sentiment, you're seeing headlines that it's getting slightly more pessimistic, but overall we're still spending as the consumer. And so that's helping earnings of the companies that make up the economy. So again, it's not a surprise that things might be slowing down a little bit, but we don't see any major red flags on the horizon.
Yeah. Yeah. Well, that's good. I mean, it's good to figure out where we're at with the market. And, some people do get concerned. And I'm glad you stay on top of this. I know that you're in contact, if not a daily basis, quite frequently every week. You're talking to the senior portfolio managers at investment firms to see, hey, where are our clients' money at? What do you see on the horizon? And that's huge. And with everything with tariffs, but the bottom line is when people see this news, like, China says they're going to do this, or Trump says he's going to do that, or, the war with Ukraine, people should not let their emotions or politics affect their financial decisions, right?
Yes. And news headlines or TV shows and social media and print publications, they don't put the boring news at the top.
No.
Right? They're putting the stuff in bright red letters.
And they're going to put the most negative spin on it as possible because that's what drives interest.
They want eyeballs. They want advertising revenue. So you have to, be aware of where your news is coming from, but also be able to filter through the noise. Like economies and stock markets go through cycles, and there's ups and there's downs. And you want to just make sure your plan is in place, and so that you don't have to worry so much when the times aren't as smooth as they have been like the last couple of years in the stock market.
Right. But that's something, Matt, that your clients don't have to worry about, right? Because you stay on top of that, so they don't need to, every time they see a news story, panic, because that's the beauty of working with a financial services professional and a team like Paladin. So it's not a set it and forget it. It's actively being managed on a daily basis, but you don't need to panic and worry about the market volatility every day.
Right. So I actually just got off the phone with somebody who's not a client, but she's interested in sitting down with us.
Sure.
And one of her main concerns was, I'm seeing my IRA and it's bouncing all over the place. It's like, okay, well, get to know you, come in for an appointment. Yeah. Let's sit down and get to know you and what your risk profile is. And then let's build you a strategy that you can be comfortable with, that's not keeping you up at night. We don't necessarily want to abandon the stock market in how we invest, but we want to tailor it so that it's something that you can rely upon. So sitting down, tailoring it to your specific profile. What are your needs? Doing rebalances on a regular basis. We've been doing a lot of annual reviews in this first part of the year and taking winnings off the table and making sure that your portfolio still fits your profile, because we've seen some good growth over the last couple of years. So it's just being diligent, staying on top of it, not panicking. We don't do all in or all out of the market. That's not practical strategy. So it's just staying on top of it, making sure things are adjusted and being able to ride through it.
Yeah. But for those who do see the news or watch, what are some key indicators, key market indicators that they might want to look at, or what indicators are critical right now?
So, and this is one that's been talk of the town for 4 years now, or really since COVID, is inflation.
What? Never heard of it.
Right. So there's CPI, there's PCE, there's all kinds of different indicators, right? And the Federal Reserve has their favorites, but everybody's pretty familiar with the CPI, Consumer Price Index. So that's a big one. There's another reading coming out tomorrow. These are all hotly watched by, the people in the business. Ideally, it continues to tick down and we get to an area that's more normalized, so to speak. But honestly, it's not that much higher now than what their goal is. Think back a few years ago, it was over 9%. That was
and different. Now we're down to what, 3.4 or something, or 3.2.
Yep. Yeah. So low threes, goals 2. So big, not too far off. Earnings reports. So how are the companies in the economy doing? That's a big one to look at. They do that every quarter. Unemployment numbers. So that comes out the beginning of every month. So that's a big one to look at. But just kind of seeing, those are big factors to see how the economy is doing. And, those are the things we watch. And I know the portfolio management team that we use for our clients, that's all they do all day. They're watching everything. So takes care of it for us. Lets us focus on the financial planning side of things.
Yeah. And again, don't panic.
Don't panic.
I mean, that's bottom line it right there. Don't panic, but you can watch those indicators.
It's not bad to know. It's just panic. You got a plan that's built for many, many years. Don't let something that's happened in 2 weeks completely derail you.
So what's the action plan for our listeners out there? What are some actionable items that our viewers and listeners out there can actually do or should be doing?
Have somebody in your corner that does this all day, every day.
Yeah.
It can be tricky trying to navigate it all on your own, not only just building a financial plan, but also looking at all the stocks and the bonds and the funds that go inside of your plan. Have somebody that this is what they do, like Paladin. Understand that your portfolio should be built towards your risk profile. And there's a lot of questions we ask to get an idea of what your profile is so that we can build you a strategy that you should be comfortable with. So if the stock market drops 20%, yeah, it's not great, but you're going to be able to ride through it because it's built for you.
Yeah.
So that's a big one. Reviewing things on a regular basis. We meet with clients at least annually, if not more frequently, just making sure if have been big changes, we can address them.
Sure.
And just focus on their time horizon. Like you've been saving in a lot of cases 20, 30, 40 years. Don't let something short-term completely derail that, and understand that you have another 10, 20, 30, 40 years to live, hopefully. And your plan needs to be able to ride through that. So just don't make knee-jerk reactions. If you have concerns, talk to somebody who is in the know, and come away from that feeling more comfortable.
And you mentioned time horizons. Everybody has a different time horizon for the most part, right? Yeah. And like your time horizon is much different than my time horizon. Yeah, I mean, our viewers can't tell by looking, obviously, that you and I have different time horizons. I mean,
no.
They could never tell by looking that mine is much different than yours. But and I will say once again, the camera adds 100 pounds. So for our viewers out there, keep that and 20 years and 20 years.
Yeah. So time horizon. Now, part of it too is in general, I have a longer time horizon than you, but there's still things I want to do in the short term.
You had to point that out directly again.
Right. Hopefully.
All right.
So there are things that I want to do in the next 3 to 5 years.
Sure.
So I got to be mindful of that particular chunk of money and not take the same risk I would with something that I'm going to use in 20 years.
Right.
So that's part of the overall planning process is what is this money used for? Let's be intentional about how we invest it so that we can hit your objectives.
Right. Right. Well, this has been a great show today, Matt. We've covered a lot, a great market update, looking at what's going on. We've seen a little bit of volatility, nothing totally crazy,
No.
but interesting.
Definitely worth watching.
Yeah.
The world's not falling apart. We don't see that happening. We're going to continue to watch and update. And obviously if things change, we're going to be on top of it, but nothing.
There you go. Well, it's always good to have a party that's not emotionally attached like you are. You need somebody who can take an objective outside look at your own big picture and help you make the right decisions. And that's where Paladin comes in. And Matt, that's where you come in. I'm not going to name names, Matt Bryant, but I know a guy, listeners and viewers, that can help you. So Matt, before we go, tell these people how they can get a hold of you.
All right. So you can go to our website, paladinfinancial.com, and request a consultation there. You also have all of the advisors in the office have a link there where you can schedule directly with them. So check that out. It's at the top right. There's a link to access our calendars. You can also call us 651-842-8406. We're happy to have a conversation with you, see where you're at with things, see what kind of help you need, and take it from there.
Ask for Matt Bryant.
That's right.
Click on Matt Bryant's name there at Paladin. Matt, great show today.
Thank you.
And I love you and the Paladin team there. This has been a good one. And listeners and viewers, that does it for today's episode of Paladin Financial Talk with our host, Matt Bryant.